I'm not a glass half full or a glass half empty person. I believe the glass is refillable.
All right, joining me will be Meb Faber, founder and chief investment officer at Cambria Investment Management, who currently offers 20 ETFs approaching $4.5 billion in assets. They continue to grow and expand that ETF lineup, and we'll certainly talk about that ETF business. However, just a couple of days ago, on July 4th, Meb released a brand new book. It's titled Investing in America: The Rise of a 250-Year Bull Market, which obviously perfect timing here with America just celebrating its 250th birthday. And I'll tell you, I've had an opportunity to read this, and I would say, just as importantly, look at this, because this book is filled with some absolutely beautiful charts and historical pictures and paintings. This could definitely be considered a coffee table book. But this was seriously one of my favorite reads in a long time, because Meb has done an amazing job of going decade by decade through the financial markets, going all the way back to the beginning of this country. And the way I would describe this book, and why I enjoyed it so much, is it doubles as like a fun history book, because Meb provides the historical context behind each of these decades in the markets, and so you get actual history along with market history. Plus, Meb drops all sorts of investment wisdom along the way. I'm just telling you, this is an excellent read. I cannot more highly recommend it. And so we are going to discuss this book and some of the key investor takeaways. And then we'll also spend a few minutes getting into the current financial markets. And again, we'll talk ETFs as well. As always, questions or comments, you can find me on X at Nate Geraci, or you can go to etfprime.com. All right, so let me now welcome in the one and only Meb Faber of Cambria Investment Management. Meb, it is always great to connect. How have you been?
Hey, bud. Great to be back. Happy birthday, America.
That's right. I got to tell you, I was half expecting you to be wearing that American flag suit that I saw in your X or Twitter profile picture. Where's that at?
Yeah, I got a bunch of swag. You come to our office, we got a big flag hanging out front. We got everything.
Well, how was the 4th of July for you? Obviously, a little more exciting with a book release.
I always love the 4th because it's 2 days after my birthday, which, by the way, fun fact, listeners, was actually the day that our forefathers voted for independence. So a lot of people think that was July 4th, but it was actually July 2nd, which is my birthday. It's always a fun time. It's summertime here in Los Angeles. I sit at my office, slaving away, working hard, and out my window go a bunch of young kids in bathing suits with, a case of Bud Light on their shoulder at 10 a.m., ready to go to the beach and just living the Los Angeles life, man. It's always a great time in summertime.
I love it. I have to ask you, are you a big soccer fan? Did you watch the game last night? I'm bummed.
I'm the world's biggest soccer fan every 4 years. So I go a little crazy for every World Cup and then kind of go back into hibernation for the next 3 years. But yeah, we're a little bit deflating today. But hey, anytime you make it to the elimination rounds, I consider that a win for the US and onward and upward. One day we'll take this title.
That's right. All right. So you are a true American soccer fan if you're tuning in every 4 years and then checking out after that, right? And then going NFL or whatever your cup of tea is.
Everything else, the big four: football, basketball, baseball, hockey, any of it.
All right. So let's get into this brand new book, Investing in America, which, by the way, how many books have you now written?
This is number 8. I asked my wife this because, my son is 9 years old and my wife wrote a novel called The Department, listeners. It's kind of spicy, totally different than all my books. I was chatting with my son. I said, Dad was a writer too. And he's like, really? I was like, yeah. I said, how many books I wrote before you were born? He said, how many? I said, 7. How many I've written since you were born? He said, how many? I said, 0. And he's now 9. I said, you're old enough to take care of yourself. So I said, time to put pen back to paper. And two technically I edited, but I curated them. So I think that counts. So we'll call this number 8.
Yeah, I was looking back. I think I've read Shareholder Yield, Global Asset Allocation, and then Invest with a House. I'm not sure I've read the other 4, so I'll have to go back and look at those.
Well, listeners, most of my books, because I got into a fight with Jeff, and that's Mr. Bezos, at Amazon, most of my books are free on, you go to my blog or Cambria, so mebfaber.com. You can find most of them as ebooks for free.
All right. So, Investing in America, give us the backstory on this book. Why did you want to write this?
I'm going to tell you a little secret, Nate. I've actually written 2 coffee table books, but this is the first one. And I'm a visual learner, so I really struggle when someone's like, hey, here's a great book, Introduction to Investing. Go read Security Analysis, 18-year-old. And I'm like, oh my God, how are they possibly going to get through this book? So I love to see pictures and charts. And this one has, I think, 70 pictures, charts, tables. But it was really born out of frustration. If you remember back to COVID, everyone's locked up, couldn't do anything, beaches were closed. And that's not why I wrote the books, because I didn't have anything else to do. I wrote the book because you looked around and this whole generation of young people, I sound like an old man shaking a cane, but this whole generation of young people, you couldn't watch sports because there was no sports, couldn't bet on sports, which is important. And young people, they love to be risk takers and gamblers. And I think that's always been true in history. But so they turned their attention to what was left open. What was left open? The casino known as the stock market. And the problem was that this magical money-making machine, all these young kids learned about it, which is great, amazing. But they learned about it through the doors of the casino. The casino handed them the rule book. It said, yes, you should trade a lot. Yes, here's some graffiti every time you trade. Yes, you should trade meme stocks and trade. Now it's 0-day options, and now it's prediction markets. And the story is much better than all of that. Putting money to work in this amazing experiment that's been the United States of America. The example we give, and yes, listeners, I know you couldn't buy an index in 1800, but this is meant to be instructive. $1 in 1800 would be 200 million today. And the whole point of this is this long road of compounding. And we have a lot of fun quotes throughout the book, littered in each chapter. And, one of my favorites is Charlie Munger. The first rule of compounding is don't interrupt it unnecessarily. And so the goal of this book, our buddy Morgan Housel had this tweet years ago where he's like, every financial advisor has the chart in their office of the stock market from like 1910 to today and all the crisis events that have happened over the years. And I said, well, let's take that back to 1800. Let's take it back to the start, because there were stocks in the 19th century, and show all the, booms and busts and everything in between. And it's meant to be a celebration of this great country, but also, not pull any punches and say, yeah, well, at one point you would have lost 80%, Great Depression. But over time, over 25 years, you'll 10x your money. Over 50 years, you 100x your money. And it's interesting timing now, too, with the new Invest America accounts that are getting seeded for all the young people with $1,000 and donations from SpaceX and Dell and others, which I think is really awesome. Anyway, the book meant to be this thing you could take out. Nate, we don't have bear markets anymore, but theoretically, after this long run, at some point we will. And I think they're a feature, not a bug, right? It's a good thing. But at some point we'll have one, and every financial advisor or parent or relative could take it out, hand it to, the person who's really struggling and freaking out and say, hey, this too shall pass. Look back in history. There's been plenty of tough times. And yet, this relentless march upward of progress has endured for 250 years and counting.
All right, so there are a lot of threads I can pull on there. I guess before I do that, let me first just ask you about the foreword of this book. It was written by Dr. Brian Taylor, who's chief economist at Fineon. Am I saying that right? Fineon?
Fineon used to be known as Global Financial Data.
Okay, and so how do you know Brian, and what's the backstory with that?
There's only so many financial history nerds in this world, and I count myself as one, and he's almost like an archaeologist. And, you think about the modern financial world, really it's like 50 years old to the kind of the modern world of fiat currencies. But you could easily take back this stock investing to the 1600s, the origin of joint stock companies in Amsterdam and then London. And so there's a long history, and we kind of start the book with this. We'll get into it in a minute. But Brian is one of the foremost historians. And so he runs a company that offers data time series data to advisors and institutions, and everyone's a subscriber from me to Bridgewater. But over the last 20 years, I've spent a lot of time trying to find great data sources. And we have a tab on my blog that has a bunch of free ones from people like French Fama, Professor Robert Schiller, on and on. And Fineon is some of the best data we found anywhere. And he spends a lot of time digging through and recreating series of everything you want, corporate bonds, talking about going back to the Medicis in Italy, all sorts of fun little series you can play around with.
You mentioned the book telling the history going back to the 1600s, and if we just take a step back, I would say the overall backdrop of the book is that America was born out of financial innovation, and you do start in the 1600s. You tell the story of the Virginia Company, basically how its investors backed the Jamestown colony, not out of some romantic idea of America as we know it today. They had an expectation of profit, right? This was a business venture. And you talk about how a lot of the early overseas exploration was extremely risky. And so the solution was financial innovation. It was sort of a VC approach where these exploration companies raised money from investors who were obviously seeking a big upside, but those investors knew these ventures could fail badly. And so they spread their bets around a number of companies. I guess talk more about that broader backdrop of America as like a VC backed startup, which I love how you frame that.
Yeah, that wasn't the narrative I was taught in school. I mean, a little bit of freedom, religious persecution, seeking a better life. That's all true, but also true that, somebody wanted to make some money. And if you think back then, 1600s, y'all, Portugal and Spain and England and all these European countries sending out these ships. But hey, you got a ship, that's an expensive venture. And not only that, guess what? Sometimes they sink. Sometimes a bunch of pirates come and steal all your booty. So it was a very risky venture. Now, how many people could actually spread their risk across 10 ships? Not many. But guess what? If you pooled your money across a bunch of investors, this advent of what we call the joint stock company, which today you just call company or stocks or limited partnership or LLC or a C Corp, was an amazing invention because it allowed people to spread their risk across multiple voyages. And all of a sudden, this exploration wasn't that risky. There was actually even a term for these type of investors were called merchant adventurers, which we would probably evolve to be called venture capitalists. But there was a lot of these. If you look at, you mentioned the Virginia Company, you mentioned even the Puritans, y'all, the Plymouth colony financed the Mayflower. And it wasn't just the Brits. You had English and the Dutch and New Netherlands and the Swedes with the New Sweden. And so it's a fun story about, struggle. Hey, and as we know, most startups fail. A lot of these voyages really struggles, like Virginia Company, really, like they couldn't figure it out. And all of a sudden they pivoted. They said, wait a minute, we can grow this little plant called tobacco. Seems to grow great here. And you find a lot of development and a bunch of ideas. So you had something in the water. Maybe it was people that were levers, that were risk takers, right? That were something in the DNA that said, okay, no, I'm going to go get on a ship. Might fall off the end of the earth, but I'm going to go check out this new land. You might have to have something in your DNA to do that. And I don't know. There's a lot of, if you look at fast forward hundreds of years, something about Americans just love risk taking, love entrepreneurship. And across all the statistics, all the surveys, what percentage of Americans own stock? It's vastly more than any other country, on and on. So it's, if you look at even some of the earliest quotes from Emerson, from, George Washington, it's when we kind of lay these out through the book. Here's one from, he's like, Emerson's like, America is the country of the future, is a country of beginnings, of projects, of vast designs and expectations. And here's another one from Herbert Crawley. From the beginning, Americans have been anticipating and projecting a better future. From the beginning, the land of democracy has been figured as the land of promise. And I still feel that way today, 250 years later. But certainly the origins were all those things wrapped up. But certainly profit definitely was one of them as well.
Yeah, I mean, you even said America was not founded despite capitalism; it was founded by capitalism. And you talked about how U.S. was founded by investors, but it continues to be driven by investors. And to me, this just set the entire tone for the book as you walk through the financial markets, going all the way back to 1800. I guess Let's talk about that. I feel like you perfectly weaved in actual history with financial market history as you went through each of these decades. As I mentioned at the top, this is not just a financial markets book, right? It reads like, to me, a fun history book. Did you have to go back and research a lot of that? Like, are you a history buff? Because there's a lot here. I know on the financial market side, you're a student of the markets, but what about on what I'm calling the actual history side?
We spend thousands of dollars on history books. If you go into the book, there's a bunch of there's a little reading list that's got some of the best ones. And the cool part was there's a lot of books that were new to me that I'd never heard of. And so we bought books on the bubble of 1720 and art books and exploration of North America and on and on. So I had a lot of fun past year reading a bunch of books and chatting with people about not just American history but global history as well, and of course learned a lot. The as you mentioned in the book, the coffee table book, by the way, listeners, you don't have to read this whole thing. You can go just flip through, look at the pictures, and each. So the way it works is it goes decade by decade, starting in 1800. And the whole point is we would talk about the decade, look at all the crazy things that happened, and then zoom out to a chart of the whole period from 1800 to today and kind of highlight where it was. And even the terrible decades where you had huge drawdowns and losses, you zoom out and say, oh, well, the returns for the next 20, 50 years were totally fine. And I love the sidebars. To me, the sidebars, which is in each chapter, we include little like fun facts and ideas. So you mentioned, the founding of America by for-profit corporations, but a lot of America was also purchased. Louisiana purchase, right? Alaska. It's like 40% of the American territory was actually purchased. And so there's a little tidbits. One of the early ones in the book I love was that listeners, the motto on your currency wasn't always "in God we trust." In fact, it used to be "mind your business," which it said "time is short, mind your business," which we can thank Benjamin Franklin for that one. But I think that's hilarious, and I kind of wish we would said that still. That's a great one. So there's a bunch of little fun facts throughout. But again, the slant is definitely investment related as we go through the book. It's like thinking about how this all comes back to topics like inflation and getting started early investing and how much not to pay your broker and luck and all those good things wrapped into one.
As you were researching for this book and ultimately writing the book, was there a particular decade that stood out to you for whatever reason? Just a decade that really piqued your interest? Maybe you learned something you didn't previously know, or again, just stood out for whatever reason.
I love reading about the 19th century because obviously I didn't live during that period, but also I feel like it's a time that, is much less familiar. As a student of history in financial markets, we spend all of our time thinking, but everyone extrapolates their own lived experience. So all the younger people listening to this probably think markets only go up. Not last 17 years, right? It's just been this amazing post GFC. Now, if you lived through the decade before that, you would have said, well, actually, it's not always like this. We had 50% declines in the decade before that. But then you go back and talk to your parents' generation. You go, and here's a great experiment for y'all to do. Go complain to your parents or grandparents, depending on how young you are, about your mortgage rate. Say, oh my God, I can't believe I pay 5% on this mortgage, whatever it is. And they'll laugh. And they'll say, son, daughter, granddaughter, we used to pay 15%. And so you look at periods like the inflationary 1970s and say, it's not always this easy. In fact, sometimes it's really hard to make any money or just to survive. And you look at times like the Great Depression, and what a different time. It's one of the books that we loved is called The Great Depression, a Diary, that talks about someone who's like literally keeping a diary during that period. And it sounds like almost like you try to put it in the context of today and say, oh my God, can you imagine just how lucky we are to be living in this time? How can I be anything but grateful and optimistic about the world compared to these really difficult periods? But it's fun to me to, try to put things into context, looking at AI and investors getting very euphoric about stocks, not just in the US, but, sectors and names. And you look back and say, yeah, that was our grandparents' railroads and canals and telegraph and phone and cars and computer and microprocessor and internet, all these various developments, which have been amazing. but realize these periods of booms and busts and everything in between. Certainly I cut my teeth in the 90s. And so going back to my childhood, I try not to be too dismissive of the young folks trading meme stocks today. But at the same time, these are lessons you learn that hopefully you learn when you're young and foolish and don't have that much money. So 1870s, fun one to me. We just had Liaquat Ahmed chatting about the 1873, which was kind of the world's first global financial crisis, always involving credit and lending. A lot of it in Europe. U.S. didn't get it so bad, but there's a lot of fun ones in there, and I promise you'll definitely learn some good and some bad.
Yeah, I think my favorite period that you highlighted, and this may be a little bit cliche, but it was during the Great Depression, the 1930s, because you talked about just how hugely important this time period was, where we saw the creation of the SEC and the FDIC, and the Fed was given more power. A lot of the early regulatory infrastructure for our current markets was put in place during this time. And then we also saw things like the US abandoning the gold standard in that decade. It was just such an interesting period where you're sandwiched between the roaring 20s, but also just before World War II. And I think going back to an earlier comment that you had, where you're highlighting these different decades, but then zooming out. Interestingly, stocks finished that decade with positive returns, right? Barely, but still positive. And I think a lot of people may not realize that. You hear the Great Depression, and you think the world's coming to an end.
I challenge you listeners, if you look at the chart from 1800 to 2025, it's great because you can kind of pick out a few of the events. You're like, okay, I can see the Great Depression. I can sort of see 2000 GFC. Is like, I can't even find 1987 on this chart, right? 20% down in a day. And that scarred a generation of investors. I mean, I think the biggest takeaway, it's a little tongue in cheek and it's meant to be instructive. The whole concept of this is this mindset of being an owner. And if you look at, this goes back to Lincoln was talking about this in the beginning of the book. But basically, if you can save a little money, first of all, you got to make a little money, save a little money, put it to work as an investor. That's the 99% of the work, right? And so, if you mentioned go back to 1900, I mean, what percentage of Americans were investors? Single digits. Like you couldn't go buy an index. S&P didn't even exist yet. On and on. So it was a little harder. You had to put the work in. And frankly, in the 19th century, most people really wanted to invest for bonds, for income. Was a much bigger concept. But this idea of being an owner is really like at the core of everything that has to do with American capitalism. And part of that, personally, is I think that's money that people would otherwise spend, which is one of the reasons that housing is such a good investment. It's not because housing per se is a great investment. It's because you would spend that money if you weren't paying a mortgage. And so same thing with investing in stocks, and which is why I love the new Invest America accounts, is it puts everybody on the same team and gets that money to work from an early age, which makes a vast difference.
Yeah, I think you had a stat in the book that 55% of American households own stocks now, something like that. And your point was just that, again, that's a really high ownership rate. And it just shows this ingrained culture that we have, that, everyday Americans.
Well, we just added another 5-10 million here in the US with these new accounts. And if you look at the rest of the world, you go to places like Japan or England or Germany or, Asia, that number is an order of magnitude lower. You talk to most people on the street, say, do you invest? And they look like you have like two heads. They say, well, they earn interest in their savings account and real estate, and and I spend a lot of time thinking about this when I think about the US, and, the US has been exceptional on almost any measure, R&D spending, patents, Nobel laureates, on and on. I mean, we're only 5% of the world's population and still only 25% of the world's GDP, but 2/3 of the world's stock market capitalization. But you start to think about this wedge and the Americans being owners. And if you continue to compound, like this whole takeaway of this book is compounding and leaving it alone. And if you continue to compound at 7, 8, 9, 10% versus 3%, for bonds or something, or -3 if you just leave it under the bed due to inflation, that divide only gets wider, which is a really interesting kind of thought experiment to go down. So anyway, it's interesting it's thinking about this compounding as well.
In terms of some other takeaways, so obviously people have to save money, they have to get in the game, and you just mentioned compounding. I mean, I think that's basic. You have to start there. But you talk in the book about how it's important to study the past. You say to prepare for tomorrow, we first need to understand yesterday. Why do you think that's important for investors?
People are going to have a hard time relating to this because the market hasn't gone down much in the past 20 years. We've had these little 20 percenters, but they've ripped right back up. And I live in LA, so earthquakes are very front of mind. But to me, everything's about power laws. And the Richter scale, if you know anything about it, listeners, is that, going from a 5 earthquake to a 6.0, it's not, what is that, 20% more, it's 10 times, right? It goes 10 times every number up. And the same is true with losses in markets or your portfolio. So if you look at your portfolio, you're down 10%, like whatever, it's bouncing around. Down 20 is where people start to kind of get a little nervous. And then every 10% down, I think it gets like 10 times worse. You get down 30, 40, 50%. And the worst part about this is these drawdowns tend to happen when the economy is hitting the tank, when everything's going crazy, unemployment's shooting up. So think 2008, 2009. It's all happening at once. Your bank might have just gone under, you lost your job, and guess what? Your portfolio is also down 50%. So it's hard during those periods to just pick out a coffee table book and say, "Oh, this too will pass." Right? We're like, no, I got to pay for college. Like I can't afford to lose any more money. What if this goes down 80? Right? And so I think one of the takeaways from the book is there's some, just again, great quotes. Charlie Ellis, time is Archimedes' lever in investing. But we mentioned George Martin. So if we got any science fiction readers, know him as Game of Thrones. And so speaking of waiting on his next book, I went a decade, but he's going to go a little bit longer if he ever finishes it. But, they asked him, they're like, George, you got kind of a depraved mind. Like, where do you come up with all these sordid tales in your book? And he was basically like, look, no, this is actually based on history. In fact, history is worse. Many of these examples, Red Wedding, no, like it's been 10 times worse in actual real history. So looking back through kind of this book, you find these times when it's not so easy, when markets went sideways or down or nowhere, or you look at these, and the example I give is, and I'm not dunking on young people again, but if you look at someone who's lived through, for us, probably yours, my age, 2000, 2008, say, oh, we've had it so hard. And you're just like, brah. Like, let's look back to someone who's born in 1900. So I use the example of my grandfather, and look what they had to live through. And or like the average person in 1900 owned like 2 shirts. That was the average. And then, by the way, they also lived through pandemic that made ours look like a cakewalk, 2 world wars, on and on, Great Depression. So history is kind of a long list of challenging geopolitical events, and there's always terrible geopolitical events going on somewhere, and particularly this day and age where our aperture is zoomed out to where it's not just what's going on in our local, someone broke into the local gas station. It's all of a sudden the entire world. So it makes it a little tough. Charlie Munger, a lot of people with high IQs are terrible investors because they got terrible temperaments. You need to keep raw, irrational emotion under control. And so it's easy to say, hard to do for sure, when it comes to not getting emotional, particularly when you're losing money.
Yeah, there are just so many things that happen and will continue happening moving forward that can interrupt that compounding if you let it. I mean, again, in your book, Civil War, Great Depression, attack on Pearl Harbor, 9/11. I mean, we go on and on with the various crises that the country's faced. And I think your point is if you can understand history and know that we actually overcome those things, maybe you can stick with being invested through these unfortunate situations that we will have. I think you said something like an investor only spends 20% of the time at new highs. The other 80% is in some form of drawdown. And so you have to know, like, that's kind of table stakes. And I guess the other thing, yeah, well, I was gonna say the other thing that I would add to that, and maybe this is the most obvious takeaway in the book, at least for me, is you just have to invest with optimism. Like successful investors, they wake up each day with a belief that today can be better than yesterday and tomorrow can be better than today. I guess, do you think that's the most important attribute of successful longer term investors? Just having optimism?
Yeah, I mean, I don't know who said it. Save like a pessimist, invest like an optimist. I like that though. Howard Marks had a good one in the 1980s chapter. He says it's more important to ensure survival under negative outcomes than it is to guarantee maximum returns under favorable ones. And everyone, we always joke with people. We say, look, it's not going to matter when you're sitting on your deathbed. If you look back, you say, man, I did 9% instead of 8 or something, right? But I guarantee you what you will look back on. He said, did I do 8 or 0? Because you lost all your money chasing some harebrained scheme on Instagram or investing in Fartcoin or 0-day options or prediction markets. You have no one to blame but yourself for these, listeners. But you got to remember, bear markets are a feature, not a bug. And what do I mean by that? Like all sorts of nonsense tomfoolery goes on at market highs and euphorias, predatory investing scams. And you look back in this book and you're like, oh, this has been going on for hundreds and hundreds of years. We talk about the South Sea bubble. You talk about all sorts of different railroad and canal manias. And look at what's going on today and various bull periods. And when that doesn't often happen as much as during big, deep bear markets, right? When everyone's down 50%, no one the financing is tighter. The standards at which people apply, hey, I'm going to lend money to this ding dong over here who's got a teleportation company, on and on. It gets, and it, as Buffett says, when the tide goes out, you see who's swimming naked. But it's a cleansing, right? Like that's the whole point of this creative destruction of free markets. Is like the bear markets are a good thing that helps to clean the system out and set the stage. And so many of our greatest companies were formed during bear markets, Google and Uber and on and on. So Malkiel, of course, he's got another quote. He says, it's not hard to make money in the market. What is hard is avoid the alluring temptation to throw your money away on short, get rich quick speculative binges. It's an obvious lesson, but one frequently ignored. And there's a lot of frequently ignoring today. We almost left a postscript in this book at the end in the end notes and said, P.S. By the way, we love celebrating this amazing market run we've had, but just to not top ticket with the publication of this book, we do want to point out that the U.S. stock market is arguably, we wrote a piece a couple years ago called The Bear Market and Diversification, just talking about how the U.S. stock market's creamed everything else, and now it's arguably the most or second most expensive it's ever been on almost every valuation metric. The dividend yield is an all-time low. It's about to cross below 0. Shiller Cape ratio, second highest ever been. I kind of wanted to take out the 99 highs just to say I got to experience it again. But there's no question that the market's expensive. Doesn't mean it has to go down, but it does mean that, hey, look, maybe you shouldn't expect 15% returns, which is what the surveys say. If you ask people, say, no, I would do 15% forever. And very quietly, other things have started to outperform in the last 2 years. We're a big proponent of global markets, which is weird given this book is solely focused on the U.S. But we've started to see, and we talk about this in the book, actually. We're like, despite how amazing U.S. stocks have done this century, so you go back to 2000, other assets like REITs and golds have actually outperformed U.S. stocks, which is crazy. Takeaway. A lot of people I don't think know that. So anyway, I'm trying to give a little perspective as well as to where we are today. But I left it out of the book because I think if you listen to my 700 podcast and hanging out with Nate, you probably know my messaging anyway.
But you paint one of the big challenges there in that you can look at the current markets and clearly see maybe there's some speculative excess out there. But on the other hand, and you see them out on X like I do, or whatever social media platform people are on, you see these people keep trying to call a top in the market. You see these perma bears who have been saying the same thing for the past 5 years, 15 years, going back to the financial crisis. And so again, there is a balance there. You can see some of the speculative excesses in the market, but also recognize that it's very difficult to call a top. Like you had a quote in the book from J.P. Morgan where he said, "The man who is a bear on the future of the United States will always go broke," which I love. I agree with that.
Yeah. Well, so this is really key, listeners, particularly when you're listening to gurus or prognosticators or someone going on TV. There's a giant differentiation between a diagnosis and prescription. Like you go to your doctor and you're like, not feeling so great. I got a fever, whatever. He could say, go home, get some rest. He could, if you got some quack doctor, he's like, you got to drive to Tijuana, and all of a sudden you got to, get some stem cells from the jackalope down there. You're like, that sounds a little iffy, Or some doctors like, you need to go fast for a month. You'd be like, well, that's weird prescription. I mean, a weird prescription for this, what probably is just like, I got a cold or something. And so the same is true with markets. And this is where it gets really hard for people. You could say something like the market is the most expensive it's ever been. All right, that's the prescription. You could argue whether that's true or not. But let's say it is true. Let's say like we can make that argument. So what? Right? It doesn't mean it has to go down. In fact, Japan, which we talk about a lot in the 1980s, their valuation when they were the biggest stock market in the world, right? So it wasn't, US hasn't always held the crown. So other venues like Netherlands and the UK and Japan have held the crown as the largest stock market in the world. Japan would be a double from here. So the US stock market would double to not even get to the Japanese. I think it roughly get to the Japanese valuation. So, but what would you do in that scenario? Watch all your friends get rich? Like, what a terrible outcome for life. But the problem is the TV hosts or other people never ask the follow-up question. It's like, okay, you're bearish, the market's expensive. What do you do? Now, here's where I think that you separate the wheat from the chaff, right? Like, is this a reasonable person, or is the person telling you to get stem cells from a jackalope? You could do things like, hey, rebalance. Great. So you know what? You're 2/3 US stocks, 1/3 foreign. Just rebalance every year. You can do what we've featured this. Rob Arnott and Howard Marks call this over rebalancing or calibrating, where so you're like, let's say the US is super expensive. You know what? Instead of 2/3, 1/3, I'm going to go 50-50. Now it's not going zero. So I'm going to sell all my US stocks or short them or buy puts and, invest only in gold or something. But it is saying, hey, maybe I'll lean into the wind a little bit, right? John Bogle famously did this, and people lose their mind every time I bring this video up. It's on YouTube, where he talks about how he sold his U.S. stock position from 75% to 25% in 1999 or 2000. Like, that's market timing, by the way, Bogleheads. Don't get mad at me. It's Jack, not me. And I think he's the GOAT, so don't get me wrong. But my point being is that at some point you got to use some common sense. And so I would often tell people, I ask them the question, like, mentally you have to walk through this. What if the stock market, which trades at 42 times 10-year PE ratio, what are you going to do if it goes to 50? What are you going to do if it goes to 75? What are you going to do if it goes to 100? Think about it ahead of time. And so we have a lot of prescription for this. So our first thing is we invest globally. So not just U.S. stocks, but foreign and emerging. And the default for that is 2/3 U.S., but no one does that. No one does that in the U.S. It's 80, 90, 100% U.S. That's one. Two, you don't have to market cap invest, right? So if you invest in the U.S. stock market, it's not like you only have one choice. You can invest in value stocks, you can invest in small cap, you can invest in mid cap. Shareholder yield that we do, the valuation is 1/3 of the S&P, I think. So there's plenty of great companies and stocks. They're just not probably the ones you hear about on TV all day. And then third, you can invest in diversifying assets, bonds, global fixed income, real assets like REITs, TIPS, commodities, commodity equities. And then the final one, of course, that is probably the hardest for people is something like trend following, which adds an element of, hey, we do have a yellow to red light exit on, and so we got 20 funds. Some of these funds implement all varying degrees of this. Our asset allocation funds are probably very non-consensus compared to a traditional portfolio that you would see from our friends at Vanguard or iShares. But they often can end up in the safe place. And one last comment, and Jeremy Grantham really stoked a fire on this when he went on CNBC and got in a big fight with Joe Kernan the other day. And people were saying, "Oh, he's been a bear. He's been wrong forever." Da da da. And I'm like, can you be wrong but also be right? And what do I mean by that? Is we wrote an article years ago called "What if you invested in no U.S. stocks?" Crazy, right? Like this entire thesis of the book: U.S. stocks are the premier asset, one of the best performing assets in the history of the world. If you just bought U.S. stocks and held on, but also you could have bought a bunch of other things: foreign stocks, emerging market REITs, corporate bonds, gold, on, dial up or down the leverage, and you end up in the same place as US stocks do. So there's a world of choices out there. There's no one thing that you have to, anytime, who was saying this the other day I was talking to, anytime you have to queue up in a line for an investment, or it has to be done tonight, 24 hours, or else subscription period ends, it's probably a bad idea. So there's a lot wrapped in that. But the whole key, I think, takeaway is there can be a difference between prescription and diagnosis and prescription. So always say when people, hey, here's the thing I think you should, here's the thing that's going on. Well, okay, well, what are you going to do about it? And that's where it really matters.
Well, on that note, let me ask you this. So I think it's pretty clear that both you and I are bullish on America longer term. But do you see anything in the country right now that gives you real pause about America's future? Because some people do have some very strong concerns at the moment, and we can talk politics or heading down that path. But do you see anything, or does this all just come back to the idea that you just highlighted, that there will always be stuff like this, and you just have to have the confidence that we'll overcome whatever that is?
Little green men, aliens. I think I would. I'm not sure if that's bullish or bearish. If they reveal that aliens are in fact amongst us, um, there's always things to be pessimistic about. And the biggest struggle with public markets is it's nonstop pessimism. You go on CNBC, Bloomberg, and it's just like the jobs report and the Fed and gold and coffee's up 20% last night, all this stuff, right? And one of the reasons we talk about this quite a bit in my personal life, a broad-based public investing portfolio, best thing you can do, come up with your strategic allocation, put it to work, put it in a lockbox, forget about it. I actually treat mine as a savings account, which almost no one else in the country does, both individually and corporate. So our company does this as well, which, by the way, my company, Cambria, hit a 20-year track record this year, which is crazy when I started this darn thing 20 years ago. But I actually think public investments you almost treat as like your savings account is Bank of America. And we wrote a piece on this called "What's the Safest Investing Asset?" and thinking like, hey, I just want to protect my money. I don't care about making 20%. I just want to keep what I got. And thinking in terms of after inflation, most people would say T-bills, and that's not actually true. T-bills after inflation have declined by half before in history. Most investors don't know that. And so actually diversifying a portfolio is a much easier and safer way. And then once I put that to work, I forget about it. But one of the things I do, and I encourage every investor to do this, whether you're actually even putting money to work or not, is over the past decade plus, and we wrote an article about this called Journey to 100X, where we look at investing in startup companies in the US. And sites like AngelList and WeFunder and other sites allow you to, you could even do it fantasy rotisserie style. You don't even have to put money to work. Say, oh, I would have invested in this, or maybe I'm interested. And I've read at this point, I think 15,000 investment memos and startup pitches for the past 15 years. And it's great because it's optimistic. There's nothing more optimistic than a founder who has that naive optimism that I understand that all startups are going to fail, but not me. I'm going to change the world. And most of them do fail, but the ones that don't, guess what? SpaceX, on, Uber, Google. And so I think it's an incredibly rewarding distraction hobby for me. But also it lets you look around the corner. So I think it was like 4 or 5 years ago now, we did a whole series on the podcast where we talked about, hey, we're seeing something in the startup ecosystem that means it's going to make its way into the public markets. It kind of trickles down in a number of years. And we did a whole series about investing in early stage space companies, right? And that seems obvious now with SpaceX and all these other companies going public. But back then, people were like, what are you talking about? This is the land of Boeing and Lockheed, and those are the only two choices, maybe Raytheon. But actually, you started to see all of these little companies in American, right down here, El Segundo, there's a ton of these here in Los Angeles, start to percolate and have real traction, real revenue, real progress. We did one interview with Axiom, who's building the commercial space station, and it's been super fun to watch them progress over the years, on and on. So I've invested in something like it's closing on well over 400 startup companies. And listeners, you don't have to do this with a lot of money. I think the minimums on some of these deals on AngelList is $1,000. Maybe some of them are even less. So thinking about this, but the reason I do it is because I love it and it's optimistic, right? And we've implemented so many of these, and of course, there's a ton of AI now. But it's fun to watch the ebbs and flows of what is getting funded. There's a lot of hard assets, hard science, physical companies that I've seen over the past year or two, which is really interesting. One more thing. I don't know if you've ever had Joe Davis on the podcast from Vanguard. You should get him on. He wrote a paper a handful of years ago, which was pretty non-consensus at the time, where he was talking about they track patent filings, and it's a look forward of a few years into the future of economic activity in certain sectors. And he was talking about this boom that was coming. And I remember, everyone shaking their head being like, dude, what is bro talking about? The US stock markets is cranking, it's expensive. And he kind of talked about these few areas where they're seeing just massive expansion. So I think there's a million reasons to be optimistic. If I see the people who are unhappiest and crashing out left and right, which I think is really sad personally, and then also just across the spectrum, there's almost two characteristics: way too online and way too political. And you read this book and you'll understand that politicians have been doing dumb stuff for as long as we've been around. They've been terrible. There's one thing we can take away is that everyone's always hated politicians for as long as our republic has existed. But at the same time, you can have that belief and still be super optimistic on the progress of not just our country, but the world as well. The next coffee table book I'm writing, and I haven't started yet, but I'm convinced I'm going to do it. It's called Everything is Getting Better, which is just a chart book of like all the wonderful progress we're making that nobody appreciates because we're all miserable because we're on our phones too much.
From my perspective, I just can't imagine waking up every day and being pessimistic. Like, I can't live like that. I think it's much more, it's a really tough existence. I think if you wake up having that optimism, I would say in life in general, not just in investing, I think things are much easier. Life's tough for everybody. I think the financial markets are tough for everybody, and you can approach things one of two ways. You can take a pessimistic approach to everything, or you can be optimistic. And I love how you just laid everything out there, because I think that's the success. Get in the game. Whether you're investing in startups or the S&P 500 or whatever it is, and have some optimism that, again, tomorrow's going to be better than today. I think that's the big takeaway. Before we move on, because I do want to just briefly ask you about.
By the way, hold on, I gotta put a bow on that.
Yeah, go ahead.
I'm not a glass half full or a glass half empty person. I believe the glass is refillable, which I thought was like, is a little cheesy, it's a little chicken soup for the soul, but I thought it was really thoughtful and spot on. I thought that was a great way to say it in this modern world of abundance, what we take for granted and the optimism which we can look to the future.
I love that. Yeah. And again, as you say in the book, America is a story of renewal. It's constant renewal, and we move forward. Anything else you want to tell people about the book? Did I see correctly that proceeds from the book are going to Invest America? Is that correct?
Yeah, I apologize. So unless y'all buy 1 million or 10 million copies of this book, it's probably not going to be in line with Michael Dell or the president of SpaceX. I'm going to get her name wrong, but she just announced she's donating 300 million of SpaceX shares to low economic, kids in this country through these accounts. Look, I think the Invest America idea, we actually wrote about this 5 years ago. I called it How to Narrow the Wealth and Income Gap on my blog. And we talked about 5 different ideas. The first of which is we should teach money in school and investing and personal finance and start in elementary school. And we don't, but it's getting better, actually. So I'm an optimist there. But also, Number two was what I called the freedom dividend, which was essentially Invest America, which was getting young people started. And the whole benefit of this is not the monetary benefit. It's when you live in a country and you have a percentage of the population, we got a trillionaire now that says, look, I feel left out. And they don't understand that they live in the best country in the world. Everyone wants to move here. They have the highest per capita income, on and on and on, all these amazing things. But because we live in this cell phone, Instagram world where you look at someone driving a Bugatti or flying on a private plane and you feel unhappy, the ability to imprint this idea of being the owner from childhood and saying, hey, you can see this number, you can make it tangible. You're investing in SpaceX, you're investing in these companies in the US, and then you see it go up. So A, you're part of the team. Going back to the World Cup, you feel the sense of patriotism and you're part of something. So you're no longer, hey, these evil CEOs at Apple. You're like, oh man, like, no, I'm invested in Apple. I want them to succeed, right? Hopefully they invent a new iPhone that, has holograms, whatever. And so I think it's an amazing development. I'm super bullish on it. I'm super excited about it. I think it'll be a fun experiment. So originally I was like, I want to be able to donate to, and they're developing this, to the zip codes where my parents were born and where I was born. And, it's like a salmon going upriver. So for my dad, that was Holstein, Nebraska, a town of like 200 people currently. My mom was in Salem, North Carolina. Shout out North Carolina. And then for me, it would have been Littleton, Colorado. I don't know if they have that ability yet. I know you can donate like to per state, et cetera, but they'll figure it out. And either way, we'll donate too. So hopefully you guys buy a lot of copies. You want to buy bulk copies, listeners, you can go get up to 30, 50% discounts on a Tasca. Otherwise, it's on Amazon. And I apologize, temporarily out of stock because you guys bought out the first round, but that'll be fully loaded. So put your order on Amazon. You'll probably get it next week. And if you want a signed copy, there's a bookstore in Manhattan Beach called Pages, which you can buy them online, has signed copies as well.
I absolutely love all of that. Couldn't agree more just on financial education. And yeah, to have kids in this country have skin in the game and be invested in companies, I think is a really important attribute. By the way, did you see that the default option in the Trump accounts is the State Street Spider Portfolio S&P 500 ETF? Did you see this?
There's like six, I think. They're all the same thing. It's all S&P. It's a fine balance between, the downside of too much choice. I go to the cereal aisle at the grocery store. I'm like, oh my God, I'm going to be here half an hour. Like, how am I going to even get through these 12 types of bran flake, whatever? And it's the same thing with markets. Is all of a sudden, if you got 100 choices, you're like, oh geez, what am I going to do here? It would be nice if they had a couple choices like, US, S&P, equal weight, or because the 5 or 6 they gave they're all the same thing. It's like 6 versions of the S&P or market cap index. Again, it's fine. And if any takeaway from the book, next 20, 50 years, it'll probably be fine. The next 10, maybe not. But and then I don't think these accounts will ever be global equities. So listeners, you'll have to get your global equity exposure in your brokerage account, it sounds like.
All right. Just a few minutes left here. I'll just ask you, putting the book aside, any big ETF trends on your radar right now? I know Cambria has been, hot with the 351 conversions. I don't know if that's front and center. Is there anything else, whether it's relevant to Cambria or just something you're interested in as an industry observer?
I think there's a very big deal going on right now that no one is really paying attention to, which is the advent of other assets and strategies outperforming the S&P by a material amount, and no one's noticing because the S&P is still having good returns. S&P did 17 last year. Guess what? Foreign stocks creamed the S&P. Foreign deep value, we have a fund that does this, was up over 50 last year. Very quietly. This year, guess what? S&P is up, let's call it 10-ish, somewhere in that 8 to 12 range, depending when this gets published. But guess what? Same thing. Foreign value up 15, 20. Even Nate, the long maligned small caps, which have been like the last thing to really struggle and not perform. And value in the US is having a great year, up 20+%. So, we call this bull market diversification seems to be picking up steam, and people are starting to notice a little bit. But if we know anything about money and inertia, everyone's kind of fat and lazy when they're making money. So if the S&P's up 17, up 10, nobody's going to move, do anything. But all of a sudden, if that goes sideways or goes down, and people look around and be like, wait, when did foreign stocks double or triple? Like a good example, you listeners, go look up the stock market of, the South Korea, which, going back to this book and talking about globally, if you told people 50 years ago that the South Korean stock market would be bigger than the UK, France, Germany, they would say, you've lost your marbles. Ditto for Taiwan, right? So all of a sudden, there's these stock markets, a lot of these driven AI adjacent companies all up and down the ecosystem. There's a lot of really interesting, you look at some charts in some of these indices, and it's just 5-10 baggers in a year. And we own a bunch of these, and we consistently have to going back to what we were talking about earlier, we consistently have to rebalance. We're like, we don't want a third of our fund in some single AI name somewhere in the Czech Republic or something. So there's a lot going on outside of our shores that I think is worth paying attention to, because these cycles can last not just a year or two, but 5 or 10 years as well.
And that's why I think, I talk a lot about just ETF flows overall. And a lot of people are talking about, we hit $1 trillion in the first half of the year. Could we eclipse 2 trillion, make a run at 2.5 trillion? And my default would be to say, well, it's market dependent on those flows. If all of a sudden we have a 20-30% drawdown in the S&P 500, that maybe that doesn't happen. However, I agree with what you just said, in that there are plenty of other asset classes around the globe that are performing. And I think what's happened over time is the ETF clearly is the vehicle of choice for investors, that even if we get that 20 or 30% drawdown in the S&P, I think investors are comfortable looking overseas. They're comfortable looking to real estate. They're comfortable looking to gold. And so I'm bullish on ETF flows overall. Kind of a tangent there, but I think it fits in with what you're saying, in that there are a lot of other areas of the market that are working. And I think that's really bullish for the ETF industry in general.
Well, what's astonishing is, the magnitude of some of these flows and successes. We look around at some of our friends that do thematics, and that's not something we do. And I'm not going to dunk on them, but like our buds at Round Hill launched DRAM, and that's a $25 billion fund in like 4-6 months.
It's unbelievable.
And we've seen the story before a little bit. DXJ back in the day, Wisdom Tree, Dollar Hedge, Nikkei. When you find a way to express a trade and there's not a lot of other choices, you can find this very narrow funnel of money into an idea. We're certainly see the flows pick up in the foreign and emerging and some other strategies as well. But ETF is clearly eating the asset management industry in a good way. Lower cost, transparency, tax efficient. And taxes matter. You mentioned 351, and we don't have time to get into that, listeners, but a lot of people feel stuck in U.S. stocks that they've made a ton of money on. And the good news is there's now a solution for that. And so you can always go to our Cambria website and find more info on that. We've done, I can't even count now, 5 351s. We got another one coming up in the fall, close to $1 billion in assets across those funds. We think it's a great solution for people who want to diversify out of single concentrated names, which historically has been a no good, terrible, very bad idea to put all your money in one stock, whatever that stock may be.
Well, Meb, this has been such a fun conversation. I always enjoy connecting. Again, congratulations on the book. Listeners, go check that out ASAP. I promise you won't regret it. I greatly enjoyed it, highly recommend it. But Meb, thank you for joining me.
It's been a blast, Nate. Love to do it in person sometime.
Thank you. That was Meb Faber, founder and chief investment officer of Cambria Investment Management and author of the brand new book, Investing in America, The Rise of a 250-Year Bull Market. That'll do it for this week's ETF Prime. Build your ETF expertise and separate yourself from your peers by registering for the ETF Institute Certified ETF Advisor Program. You can learn more at cetf.org. Next week, I'll be joined by Brian Walsh, who is head of advice and planning at SoFi. So we're going to talk about their ETF business and also some ETF usage trends that they're seeing across the SoFi platform. Should be an excellent conversation. Until then, have a great week, everyone.
ETF Prime is hosted by Nate Geraci, president of OTR Media, LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. This program is for informational purposes only and does not constitute investment advice. Investing in ETFs involves risk, including possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Some guests appearing on this program may also be financial sponsors of ETF Prime. OTR Media and Nova Diaz are not affiliated with VettaFi or any of its affiliates. VettaFi's participation in this program should not be construed as an endorsement or an indication by VettaFi of the value of any OTR Media or Nova Diaz product or service. Visit etfprime.com for more information.